How's it going, everybody? My name is Anthony Rosales, and I'm here to talk to you guys about, as you may know, term sheets, private placement memorandums, and due diligence. I'll begin with term sheets. Term sheets are an agreement, or it's a document between two parties, usually a startup company and a venture capitalist company. It's an agreement between them for seed money for them to start up or continue to do their business. And they develop a term sheet. A term sheet is something so that the two parties can see eye to eye, so there's not any misunderstandings in the future, and won't waste any time saying, "Oh yeah, we didn't see this or do that." It's a checkpoint, and usually a term sheet has information like how much money the startup's looking for, the percent stake in the company that the venture capitalist is looking for the amount of money that they're giving to the company. And they also have a time frame for a response on the terms and like a preferred payment method. And with that, that's for like the seed. And then from there, as your company grows, you have a B, and a C round. And then as you go down the list, your company gets a little bit bigger and you start asking for a little bit more money. With the A round, you're asking from about 2 to 10 million, B round 10 to 50 million, a C round generally about 100 million. With the A and B round, you're looking for expansion or maybe help with a launch of a product that you don't have enough capital to raise, but the idea is there. And with the C round, you're looking for something. Since you're looking for more money, you're looking maybe to expand to another nation, a foreign country, or even like a merger or an acquisition, just to acquire another company, get a little bit bigger by that means. And with that term sheet, you get information such as who's going to be on the board, because of course the venture capitalist wants to have a couple seats on the board, how many seats are going to be on the board, and who's going to be the CEO, because depending on how much money they grant you or they give you, they want higher position in the company. They might not even have you say you're the CEO of the company, you're the founder of the company. They might not even have you be CEO and have you at a lesser position, just depending on the money and the terms that they give you on the term sheet. From there, I'm gonna go on to private placement memorandums. And private placement memorandums are documents that these are legally binding. The term sheets weren't legally binding, and it encompasses your company as a whole. It's a whole 360 view of your company: the goods, the bads, the ins and outs, the risks, and the potential upside. So it goes into detail about management. Goes into detail about the risk of your company, the market that the company is going to be selling in, and the industry as a whole. It has forecasts for their financials. They have the history of their financials. It's essentially due diligence that's in paper form. It's already given to the investor to make sure they make a sound financial decision. And with private placement memorandums, they're restrictive to who you could be able to sell to. So you can't sell to a regular, just mom and pop, a small time investor. It's what they call a QIB, a qualified institutional investor. People like banks and just institutions, not just regular investors. And with that, you have a Reg D. And with the Reg D, you don't have to sign up or you don't have to register with the SEC, which saves time and money. So you don't have to report a file with them. And that gives you the authority to ask from as little as 20 to 50,000 to, I believe there's no cap. It's not unlimited money you can ask for. And there's also a Reg S, which gives you the same authority, but also lets you sell to foreign investors. Just get a little more reach out for your company. And then to end it, due diligence. Due diligence is essential. It's crucial to making a sound financial decision. Say you're regular investor, small-time investor looking to invest into a stock, you need to look at everything from, like I said before, which stuff is that's in the private placement memorandum. Management bios, see if they're heavily vested in the company. If they are, that's a good thing. Stock price history. Look at their financials, their balance sheets, look at their valuation, everything. A whole 360 view to make sure you're making a good move with the money that you're investing. Because if you don't do your due diligence, you could be out all your money. And that's not what we're trying to do here. And with that being said, thank you for your time. Once again, my name is Anthony.